इधर ये ऑफलाइन में ऑनलाइन बैठे हैं ना, वो इसमें डाल देना. So I think Professor Vibhash has already given my introduction. I need not, right? And I don't know, he must have told you that I have to take 3 topics with you. आवाज़ तो ये करेंगे. I am not concerned with आवाज़. आप यार ठीक करो आवाज़ को. I have to take just 3 topics with you. Just first make a note of those 3 topics before I tell you a few other things. And these are very, very important topics. Invariably you get questions on these, other than this year's exam, which was very useless. Even Vibhash said very useless paper. I don't know who prepared it. I hope Sitaraman didn't prepare. With very little economics. Please write 3 topics. First would be fiscal policy. Fiscal. Many students after the first class, when they meet me, they say, sir, you taught us this about physical policy. So don't mistake between physical and fiscal. North Pole and South Pole difference, all right? Fiscal policy. Number 2, second topic, foreign investment. Foreign investment. And third topic, always in the news. In fact, first and third are always in the news. Second is also very important, inflation. You know, the world is struggling with inflation. Shall I repeat? Fiscal policy is going to be our first topic, which we'll discuss. Second topic is going to be foreign investment, and third one would be inflation. Right? I know Professor Vibhash has given you all the references also, including next IS book, which I would say is very comprehensive. It, you know, you don't even need to read 11th standard book and so on, because it has already covered. And I must appreciate Professor Vibhash for the hard work he has done for, you know, compiling this book. Okay? I have not seen the new edition. I don't know whether the new one has come, but I'm talking about the old one, which is very double the size of the last year before last book. All right? Okay. You've got all the references, but I would always like to add one very important reference, and that is economics dictionary. Please note down. I am not adding to any reference given by Professor Vibhash. They are more than adequate. But I am just saying that there is one reference which I would like you to really get hold of, which is economics dictionary. So far you have heard of English dictionary, but this is a wonderful piece of work. This is either by Collins, please make a note. This dictionary, it is either by Collins, the author is Collins, or by Penguin. You can buy either Penguin or Collins, and you will find this a very wonderful reference, because from letter A to letter Z, any economic terminology that you want to know, you will get it in the dictionary. Any economic. It is so good, because you will agree that most of the general studies students are very weak in economic terminology. This has the best explanation given for every standardized terminology. When I use the word standardized, most of them are standardized, but I'll give you an example what is not standardized. This dictionary will not tell you what is Sensex, because Sensex is a pure Indian term, sensitive index. It will not tell you what is Nifty, it's Indian, National Index of 50. But it will tell you everything that you want to know on economic terminology. It will also tell you, it will also give you all the international organizations, what is their role, what is their present status. It will also give you all the regional organizations. It is a wonderful piece of work. Having spent so much, might as well spend another 400, 500 rupees to get hold of this dictionary, because I would say it's a treasure to possess. You may not be reading it every day, but the fact that you have it is more than enough for you to consult it from time to time as and when you have problems, right? And another thing I'd like to tell you is that it is so important to be reading at least one newspaper. The choice is always yours, but what I have observed over the last 2-3 years is Indian Express is doing very well in terms of economics coverage. For a long time we were recommending Hindu, you know. I'm not saying Hindu is bad, but I would say Indian Express has overtaken Hindu, all right? So choice is yours, because at least one newspaper means that you are in touch with what is going on in terms of changes, okay? This pertains not only to economics but any other discipline, all right? So this is our introductory remark, but I'd like to ask you, how many of you have economics background? When I say economics background, economics honors? Honors? You also honors? Sorry? In graduation. So just 3 or 4 students? Economics background, just 3 or 4 students. And you would have noticed that how promptly and proudly they raise their hands without realizing they are going to be my main prey. At least the one who is economics honors. All right? So I am going to ask her, if you are asked a question, fiscal policy deals with what? What is going to be your answer? Every policy is made by government. The only difference is now every policy is made by Modi. Economics honors? You said you are economics honors. I have a very simple question to ask you. Fiscal policy deals with what? Sorry? Qualitative characters? What is? Expenditure and? Not a bad answer. You should have said revenue and expenditure of government. Very good. Excellent. Non-economic student. You have economics background? Yes. No. Let me tell you, engineers are very sharp. Right? They are very sharp. So, our economics student has failed. Don't be in a hurry to write anything. I dictate everything. Actually, fiscal policy is also called budgetary policy. So, what is a budget? It's a statement of revenue and expenditure of the government. Yes or no? And if, in a country like India, expenditure always exceeds revenue. Yes or no? In which case you can say that fiscal policy is a policy which deals with revenue of the government, expenditure of the government and borrowings of the government. Because when expenditure exceeds revenue, how do you make up for this difference? By borrowing. Correct? Which means fiscal policy is nothing but budgetary policy. A broad term used to define fiscal policy is public finance. I'll dictate everything. I said budgetary policy. You'll agree that even large number of families also prepare their budget. Yes or no? Many families. They sit down on the first of the month and prepare their budget. But then, what is the difference between government budget and a family budget? Our economic student will tell us. Two major differences. When a family prepares its budget, it is a monthly budget. Government prepares its. The second more important difference. When family prepares its budget, it says, this is our income, we will spend according to this income. When government prepares its budget, it says, this is our expenditure, because government expenditure is committed. And we are going to find resources to meet this expenditure. That resources could be revenue as well as a shortfall in revenue which is covered by borrowings. Clear? Right? I'll dictate everything. One last thing. I'm writing something. I want you to give me the answer. Progress is my hand is very bad. Tell me, analyze this statement. Progress is often equal to the difference between mind and mindset. One who analyzes this statement properly shall be recommended. Yes. Yes. Different between goal and?
Mindset is goal and mind is your action at the moment.
The journey between propose and execution.
Somebody's mind can be very intellectual, but mindset he can do hard work.
No. Not goal and action. I ask you a question. Everybody has a mind. Yes or no? Even animals have mind.
Mind is we are
Mind
thinking.
works haphazardly, where mindset is.
Sorry?
Mind works haphazardly, where mindset is fixed.
No. Everybody has a mind. But how many have mindset to achieve a certain goal?
And what we have and how we implement that.
Yeah. Everybody has a mind. It's like saying that you can't deny that everybody has mind, right? But how many of you have mindset that I am going to become a civil servant? That means unless you have the mindset, mind itself will not work. You understand what I am saying? If you have mindset, then you will leave no stone unturned to achieve that goal. Can you deny that everybody has mind? But how many would you, or for that matter anybody, mind set to achieve a certain goal? And do you know the brain behind this statement? Narayan Murthy, Infosys chairman. What a wonderful statement it is. Unless you have mindset, you cannot achieve. It's like saying that I don't have a mindset to travel from my home to another town or to another country. The concept, the mindset. It's very important for you to have the mindset to achieve a thing. All of you have mind. Everybody has mind. How many of you would have mindset that I must achieve this goal? It's a very good statement if you deeply analyze it. Okay, so we are going to start. with dictating what is fiscal policy and what are its objectives. Okay? And you have already said fiscal policy has three components: revenue of the government, expenditure of the government, and borrowing. I want to make one thing very clear. When we discuss fiscal policy, and this is one topic out of my three topics which takes the maximum time, not less than 4 classes. 4 classes of fiscal policy, 3 classes of foreign investment, 3 for inflation. We wind up in 10 classes. Right? This is very comprehensive. All right? So let's first start with a small paragraph. Fiscal policy is a policy which deals with revenue of the government, expenditure of the government, and borrowings of the government. Full stop. It can also be called budgetary policy. It can also be called full stop. A broader term to define fiscal policy is public finance. You know, here the word public doesn't mean you and me. Public here means government finance. Full stop. Fiscal policy has the following principal objectives. Now, before I dictate those objectives, I'd like to ask our economic students. Please write. 1. Promoting growth and investment. Promoting growth and investment. 2. Mobilization of resources. Mobilization of resources. 3. Reduction of inequalities of incomes. 2. With revenue, to use it for investment and promoting growth. Correct? Very simple. Second objective is simpler: mobilization of resources. Principal source of revenue is taxation. Correct? Are you reading newspapers? Are there non-tax sources also? Non-tax revenue? Principal source is taxation. Give me some example of non-tax revenue of the government. Sorry? Disinvestment, dividends from PSUs. You are reading in newspapers. Today also it came that RBI is giving 87,000 crores as dividend to the government. Right? Last year it gave only 44,000 crores. Then fees, fines, rental income, interest income on loans given by the government. These are all non-tax revenues. But principal source is taxation. Correct? That's the second objective. Third is very simple. Very simple. I ask you a question. Okay, who can explain the third one? One is progressive taxation. That means taxing the rich at a higher rate than the poor. Subsidies, welfare programs, right? Because government is using its revenue to spend on these. And the fourth one, क्या हो गया? नहीं आ रही, क्या करें? इससे आ जाएगी? कैसे? ये ऑनलाइन के लिए है?
ऐसा ये नया है, इसमें प्रॉब्लम आई।
ऐसे तो कोई भी आवाज कर देगा। ओके, ऑन कर दिया? ऑन है। अब आपको पता कैसे चलेगा ऑनलाइन कोड? ओके, सो reduction of inequalities of incomes. I have told you, taxing rich at a higher rate, poor at a lower rate, giving subsidies, large number of welfare programs, all these. The fourth one, what is the fourth one? Yes. Let me tell you, okay? Let me tell you, this function, the fourth one, assumed very great importance during the 2 years of pandemic. 2 years, every economy in the world suffered. Very low growth rate, unemployment, inflation. So, private sector was not willing to invest because demand was very low. Who came forward? The government. Government spent excessive amounts to, kickstart the economy. In fact, when Indian government set aside 16 lakh crores in 21-22 to kickstart the economy, we all mocked at it. Mocked at it because economies like the US, perhaps spent at least 10 times more than what Indian government spent. Every economy, because fiscal policy means government will spend in order to revive the economy, which means an economy which is facing a slowdown, it is to be stabilized by the government coming forward and investing and spending so that people get, spending means generating jobs. One very important term coming in newspapers prominently is what is called capex. Yes. Capital expenditure means creation of assets. If you are creating assets, you are generating jobs. Right? So, every government adopted its government expenditure policies focusing on capital expenditure to generate jobs, employment, incomes, so that demand starts rising and economy starts picking up and it gets stabilized. So, that is in fact, stabilization function is very, very important in the context of what governments did to kickstart the economy after the pandemic. All right. So these are four functions of for fiscal policy. I would not, in fact, it would be as correct to say that almost these very functions are also of monetary policy. Because if somebody asks you, which are two principal policies as part of a country's overall economic policy, your answer should be fiscal policy and monetary policy. Every other policy depends on fiscal policy and monetary policy. Is that clear? So this was the introduction in terms of A, defining fiscal policy, and B, what are its principal objectives. Now, since we said that fiscal policy deals with three things: revenue, expenditure, and borrowing, I must make one thing very clear. We'll first take up revenue. When we take up revenue, we will comprehensively take up India's tax structure. Every bit of what you want to know on India's tax structure and various taxes, you will know. You have already been circulated that. The idea is that maybe by tomorrow, after 1 hour or 1.5 hours, I may be able to take up this. But I have given you this so that back home you can read this and come prepared and mark your doubts. Okay? Right? So first we'll take up revenue. When we take up revenue, we'll finish comprehensively our understanding of India's tax structure. Next, we will not take up expenditure. We will take up borrowings. Because expenditure is not going to take us more than half an hour maximum. But borrowing is going to take us almost one full class. I'll convince you how. Have you been reading about a term called fiscal deficit? Will you not be interested to know what is this deficit? Why is it that every finance minister in India, while presenting the budget, first thing first, he or she wants to tell the people is, we have tried to contain fiscal deficit. What is it? What is so important about this deficit? And I ask you a question. By definition, what is the deficit? The difference between expenditure and? So please try and understand, I make it very clear to you. We'll first finish comprehensively India's revenue structure, that means tax structure. Then we'll take up borrowings. When we take up borrowings, I'll tell you how many deficits are reflected in the union budget every year. There are as many as 4 deficits. Each deficit has its own importance. I'll have to explain to you each deficit with the help of equations. And then I'll have to tell you what is the importance of each deficit. In the process, I'll also tell you why is it that every finance minister in India is so obsessed with the term fiscal deficit. Even today's newspaper says that 22-23 fiscal deficit government was able to achieve the target of 6.4%. Right? And the last thing that we'll do on fiscal policy would be expenditure. It will not take us more than half an hour. So we are going to start first with revenue of the government. So give the heading revenue as part of fiscal policy. All right? Please write a small 2 or 3 lines. Principal source of revenue. Principal source of revenue is taxation. Full stop. Now before I dictate, I want to explain. Before we start explaining India's tax structure, which are the various taxes that Indian government has. It is important for us to understand what is the tax structure of any country in the world. What is the general tax structure? Any classifications, tax structure of any country in the world has, including India. Once you have the general tax structure, then we will take up India's tax structure. Right? So please start writing. Tax structure of every country in the world. Tax structure of every country in the world has three classifications. As follows. Number 1, give it Roman 1. Roman 1. Direct and indirect tax. Means distinction between a direct tax and an indirect tax. First classification. Second classification. Distinction between specific tax and ad valorem tax. A capital D small VALOREM. I repeat, the second classification of tax structure in any country in the world is to distinguish between what is a specific tax and what is an. The word ad valorem means, you can put it in brackets, the word ad valorem means according to value. According to value. And the third classification is distinction between progressive tax and regressive tax. Okay? Unless you know these, there is no point taking up India's tax structure. You understand what I am saying? And you will realize it. Let's first define what is a direct tax, what is an, with examples. Start. A direct tax is a tax. A direct tax is a tax which has to be paid by the same person or entity, it could be company, same person or entity on whom it is imposed. Full stop. In other words, a direct tax is a tax whose burden cannot be shifted to someone else. Full stop. Taxes on income and wealth are called direct taxes. Like income tax, corporate tax, capital gains tax, capital gains tax. Don't worry, we'll do each of these in the Indian context, etc. Full stop. Direct taxes. Direct taxes help reduce inequalities of incomes in a country. Direct taxes help reduce inequalities of incomes in a country as they are imposed in a progressive manner. Full stop. Read what you have written. The way I teach is, I dictate, then I give time to students to read, so that if you have a question, you can ask me. Please read what you have written. Clear? Yes.
Without inequality, without progressive taxation also we can reduce the inequality.
Yeah, but by and large, direct taxes are based on progressive taxation, by and large. So I ask you a question. What you have written is, direct tax is a tax whose burden cannot be shifted to, it is to be paid by the same person or entity. It could be a company. I ask you a question. Tax on Reliance Industries, can it be shifted to Mahindra's? Tax on my income, can I shift it to Mr. B. Singh's income? I wish I could. Say, right? They're direct taxes. Because direct taxes help reduce inequalities of incomes. As we go along, you will see how. I have already given you examples. Shall we explain now indirect tax? Start. Sorry? Progressive means that as your income goes up, rate of tax goes up. That is called progressive. You will know. Listen, when I take up India's income tax structure, you will know how progressive it is. You will know every tax in the Indian context. You will know what is capital gains tax in India. I'll give you details of every tax, direct tax as well as indirect taxes. Wait patiently. Please write. An indirect tax is a tax which is imposed on someone, but paid by someone else. Full stop. In other words, an indirect tax is a tax whose burden can be shifted full stop. Taxes on goods and services are called indirect taxes, like excise duty, comma, custom duty, comma, VAT, value added tax, VAT, comma, GST, etc. I will do each of these in the Indian context. Correct? I ask you a question now. In your fees, did you pay GST? 18%? GST was imposed on next IAS. Next IAS shifted the burden to you. Yes or no? You go and buy a refrigerator or a washing machine or anything. Shopkeeper charges you GST because GST is imposed on the shopkeeper. Shopkeeper passes on the burden to you because you are the ultimate consumer. Is it a magic? You are paying indirect taxes every day. Every day you are paying. Now I ask you a question of pure common sense, and answer that question. Sorry. Let me see how good are our economic students. In any economy, for example, 1991 in India, of the total tax revenue that the center collected, 81% came from indirect taxes and 19% came from direct taxes. 1991. I ask you, what could be the status, say, in 2023? First question. Any idea?
Their indirect taxes are 30 lakh crore and direct taxes are around 3 lakh crore.
54%? 54% what? 46%? It is the other way around. Where did you read it? Google. Google is Google. Today, roughly I'm saying, 52% may be direct taxes, 48% may be indirect. It's almost, which means today, the percentage of revenue collected by the center from direct taxes is marginally higher than those from indirect taxes. My second question, is today's position better or 1991 better? Why? No, the answer is that in a country where you have a situation like this, right, you would say that the tax structure of the country is highly regressive because, now listen to this statement, indirect taxes are on goods and services. Have you written that? They are on goods and services. And goods and services are consumed alike by the rich and the poor, except for luxuries. Say yes or no. I give you a very simple example. You go and get your car serviced. The GST on car servicing is 18%. Ambani also gets his car serviced. He also pays 18%. Car servicing. Be it Bentley, be it Jaguar or whatever, or be it Maruti. You understand? Servicing cost is 18%. A large number of goods that a common man consumes are also consumed by the rich man. I said other than luxuries. So he ends up paying the same tax as a common man. So that is why in a country where the structure is like this, which it was in India in 91, we used to say India's tax structure is highly regressive because tax burden falls much more heavily on the relatively poor people. every country would strive to increase the ratio of direct taxes vis-a-vis indirect taxes. Have I made myself clear? Because merely defining what is a direct tax, what is an indirect tax will not suffice to have a comprehensive understanding. You must understand that indirect taxes are on goods and services. And goods and services are consumed alike by the rich and the poor, other than some luxury items. So, in such a situation, if in a country of the total tax revenue collected by the government, revenue from indirect taxes is predominant, you could say that tax structure of the country is highly regressive, in the sense that the burden falls much more heavily on the relatively poor. I hope I have made myself clear. I gave you a very simple example. In this very class, I ask you a question. Some of you, income of some of you parents may be low. Income of some of you parents may be very high. They are also paying 18%, you are also paying 18%. Is it clear? So that is first distinction. Let's move on to our next distinction, which is, yes, specific, and this is going to be very interesting. We are now going to define and explain what is a specific tax and what is an ad valorem tax. Yes. Yeah, obviously, the tax is imposed on the shopkeeper. Shopkeeper recovers it from you because the commodity is finally consumed by you. What do you say? Reliance, any company. Why Reliance? Any company which manufactures a product and sells it in the market, right? The tax may be imposed on the company, but it recovers from you. Simple as that. Why do you talk of Reliance? Any company. After all, goods are manufactured by different companies. Is it clear? I have given you, in fact, I have given you the best example. Next IAS. Right? Coaching service. Coaching is a service. Next IAS is providing you coaching service. You have said indirect taxes are taxes on goods and services. So, next IAS is providing you coaching service. For providing you coaching service, it is the government imposes the tax at 18% on next IAS. Next IAS recovers it from you because ultimately you are getting the benefit of coaching. Yes or no? So let's start writing, explaining what is specific tax. Please write. Yes. Yeah, of course. Yeah. No, that's the question he also asked. Progressive means as income goes up, tax rate goes up. And then I also said that please wait. When I explain to you India's income tax structure, you will see that if your income slab is this, tax rate is this. If an income slab goes up, tax rate goes up. Exactly. Yeah.
Does it also take into account the personal as well as the corporate? Like the comparison, is it between the corporate taxes and personal taxes, or is it just among the?
My dear, income tax would be on individuals. Corporate tax is on companies. So we will explain to you what is India's income tax structure, what is India's corporate tax structure. You understand? Because corporate tax structure means tax on companies' incomes. Income tax structure means tax on individuals' incomes. But that act is the same. 1961 Income Tax Act applies to income of individuals and income of companies. And we distinguish between what is income tax, what are the slabs in India on income tax, and what are the slabs in India for corporate tax. You will see as we take up each of these taxes in the Indian context.
So it is progressive among the slab of like if it for personal or corporate, it is not progressive overall when we consider personal, corporate, and this.
What is progressive overall?
Overall in the sense like if there is a corporation, like
If there is a,
corporate,
there is a corporate. So,
which is paying much more tax rate, much less tax rate than me.
then
Me,
then you. But why are you comparing you as an individual with the company? Oh my goodness. My dear, where are you and where is Ambani's company? Relax, enjoy. You can't, you are comparing, this comparison is so odd. Why do you compare corporate income of Ambani with your personal income? You are nowhere, I am nowhere in front of Ambani. That is a different thing. You end up paying 30%, that's a different thing. That is where we say, you end up paying 30% if your slab is X. A corporate also may end up, because the corporate tax rate in India is also 30% flat. You will see. But then let's not compare companies' tax with individuals' tax. All right? Okay. You have a question? Yes.
Sir, is there any difference between duty or tax?
Generally, when it comes to indirect taxes, we use the word duty. For example, excise duty, custom duty. We never say income duty. We always say income tax. Goods and service tax, because goods and services tax, that's why I said the terms can be used interchangeably in terms of indirect taxes, not direct taxes. Is it clear? Any other question before we proceed further?
If I buy this pen from a shopkeeper,
From a? Correct.
and I'm giving a indirect tax, right?
If you buy this pen, okay.
And then the shopkeeper might be buying it from some distributor.
So,
So the direct tax that I have given is being paid by the shopkeeper or distributor.
what is he asking? What you are asking is, I will simplify. What you are asking is, you have bought it from a retailer. Retailer would have bought it from a wholesaler. Say yes or no. Correct? Correct? Have you seen one thing? What I have dictated? I have said indirect taxes are like excise duty, custom duty, VAT, GST. Have I dictated? What is VAT? Value added tax. Tax on value added at each stage, right from manufacturing to wholesaler to retailer and to final consumer. You will see GST is nothing but a value added tax. I'll give you a table showing GST starts from manufacturing to wholesaler to retailer to final consumer, and at each stage tax is paid only on value added. Wait patiently. Your question will be answered so comprehensively that you will regret why you asked this question. Wait patiently. All right? You are asking questions which, as it is, have to be explained as we go along in terms of explaining India's tax structure, each individual tax. Then only you will know that your question has been comprehensively answered. Wait patiently. Let's understand, as I said, general characteristic of tax structure of any country in the world. Unless you understand that, for example, I ask you, supposing I tell you, I give you a chart and say, these are various direct taxes imposed by the government. First thing question you will ask me, sir, what is the direct tax? Yes or no? I give you a chart, these are various indirect taxes imposed in India. Your first question will be, sir, indirect tax, what is an indirect tax? That is what you are first finishing, so that as we proceed, you have no problem understanding. Shall we start? Okay. A specific tax is a tax which is imposed on the basis of any specific, which is imposed on the basis of any specific characteristic of a commodity. Like its weight, 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 comma length, comma width, comma quantity, etc. Full stop. For example, tax on cigarettes in India. Tax on cigarettes in India is imposed on the basis of the length of the cigarette. Do you understand? On the length of the cigarette. Read what you have written. Then I'll give you other examples also. Read. Specific means it could be weight, length, width, quantity. I ask you a question. Have you heard of what is called car CC? CC. CC means? Yes. That is specific. Correct? Quality is also a characteristic, but basically, don't look at quality. When quality comes, value. So now, let's start a fresh para and you know the difference between specific and ad valorem. Please write. An ad valorem tax is a tax which is imposed on the basis of the value of a commodity. On the basis of the value or price. Value is nothing but price. Value or price of a commodity. Full stop. The distinction between specific tax and ad valorem tax. The distinction between specific tax and ad valorem tax can be explained with the help of the following example. Now you write the example. This will make things very clear. Then I will tell you about Indian government also. Then everybody sitting here will easily understand. Now I'm first giving you the example. Please write the example. We go to eat in a restaurant. Please write. We go to eat in a restaurant and order 3 dishes. Order 3 dishes and the total bill without taxes may be rupees 2,000. Full stop. In this case, if tax is imposed by the restaurant, on the basis of per dish, it will be called specific. But if it is imposed on rupees 2,000, it will be called ad valorem, according to value. Now I am going to dictate to you an example which is true in India. Please write. In India, the central government, if you write this example, examiner will give you 11 out of 10. In India, the central government imposes tax on fuel. What is fuel? Diesel, petrol, etc. Tax on fuel on a specific basis. That is per liter. Full stop. In other words, the center imposes excise duty on fuel on the basis of per liter of fuel, whereas states impose tax on fuel on ad valorem basis. That is value added tax on the basis of the value of petrol. I'll convince you what you have written. You know, when elections in 5 states were to come in India, Modi government reduced excise duty on petrol by rupees 10 per liter, if you remember, and on diesel by rupees 6 per liter. That means per liter means specific. When it came to the states, supposing when center reduced it by 10, supposing petrol was 100 rupees per liter, it was brought down to 90. When state will impose VAT, it will be on 90. 90 is price, value, not per liter. You will easily know it because you remember when center reduced this, center also urged state governments to reduce VAT. If you recall, every state, practically every state, Delhi, Rajasthan, every state raised VAT on petrol and diesel during the pandemic. The reason was Consumption was very low. You couldn't drive. Yes or no? So they wanted to make up for loss of revenue. So every government raised VAT. That is value. The term VAT means on value. And center also raised excise duty on petrol and diesel per liter. This is the best example, because in India, when you talk of GST, as you start learning about GST, you will know that alcohol, fuel and electricity are out of GST. Why? States made sure with Jaitley, finance minister then, who was preparing the draft for GST, that if you bring alcohol, fuel and electricity under GST, we will be out of GST. The reason is every state earns nearly 50% of its total tax revenue from alcohol and fuel. Have I made myself clear? That specific tax is based on any characteristic or feature or attribute of a commodity. It could be weight of a commodity, length of a commodity, width of a commodity, so on. Whereas ad valorem, the term ad valorem itself means is based on tax imposed on value, that is price. Now, before I dictate further on this, you will agree that every country in the world would have some taxes imposed on specific basis, some taxes imposed on ad valorem basis. I want to give you another very good example which happened in India, but my fear is that whatever you have understood so far, even that you may not lose. Shall I tell you? Shall I give you that example? 2013. There is something wrong with the duster. 2013. Global oil prices. I hope you understand global oil prices. Global oil prices touched $140 a barrel. How much? $140 a barrel. Correct? India imports more than 80% of its fuel requirement. That I think you know. Correct? When Indian government imports oil, it imposes import duty also. Listen to this carefully. I am explaining to you the distinction between ad valorem and specific, right? It imposes import duty. This import duty is imposed on ad valorem basis. Supposing oil has been, so $140 a barrel means on 140, let's say import duty is 5%. Now, when it imposes import duty, the oil becomes costlier. It becomes costlier for the consumers in India. Yes or no? For some time, what the government did, in order to reduce the burden on consumers in India, it shifted import duty from ad valorem to specific. How? Very simple. Very simple. Those of you who are engineering students may understand it immediately. I ask you a question. You are importing 80% of your requirement. Means if you are importing 100 liters, liters is just, you are consuming 100 liters, you are importing 80 liters. So the value of this 80 liters was earlier subjected to import duty. Correct? Price is going up, but quantity is not going up. The quantity that you are importing is the same. Say yes or no. Yes. My dear, what is value? P into Q is value. Yes or no? Yes. So, for some time, to reduce the burden on consumers, government started imposing import duty on a specific basis, on quantity. Because quantity imported is the same. Price, global price is going up. So, if you are imposing on quantity, then the burden automatically comes down. Whereas 5% on 100 rupees $100 and 5% on $140, this is higher. Yes or no? This actually happened in India for some time. I know some of you are totally confused, but enjoy, relax. You have otherwise understood, no? Right, okay. So that is specific and ad valorem. Now let's take a look at the third one, progressive.
Like electricity consumption, ma'am. According to consumption unit, the government charge.
Yes, some, according to how many units you have charged. For example, you say up to 200 units free, like this. You can take several examples. Alcohol? क्या कह रहे हो? आप अल्कोहल पीते हो? वो मैं बाद में बताऊंगा आपको. Alcohol is always VAT. I told you just now. Did I not tell you? VAT. Please write.
The import duty that is government is paying to the other countries.
Wait patiently when I take up custom duty. You will know custom duty invariably means import duty. Right? Now let's take the third distinction, progressive and regressive, which is very easy. A progressive tax means that as income of a person goes up, comma, the rate of tax imposed on his income also goes up, so that at higher rates, at higher incomes, his tax burden is also higher. So that at higher incomes, his tax burden is also higher. Full stop. Progressive taxation, therefore, helps to reduce inequalities. You will see when I take up India's income tax structure that it is progressive. But to a layman, when we explain what is progressive taxation, we give a very simple example. We say, let's say income of A and B. A earns 5,000 per month, B earns 10,000 per month. So before tax, B's income is twice double of A's income. A may be taxed at 10%, B may be taxed at 20%. After tax, B's income comes down to 8,000. After tax, A's income comes down to how much? 44,500. Now, after tax, B's income is not twice A's income. Yes or no? This is called progressive taxation. Very simple example. You have A and B. Before tax, B earns twice A's income. After tax, B's income is not twice A's income, which means inequalities have been reduced. Okay, now write regressive taxation. A regressive tax means A regressive tax means that as income of a person goes up, comma, the rate of tax imposed on his income may go down so that at higher incomes his tax burden may be relatively lower. Full stop. No country may opt for regressive taxation. So what is regressive taxation? As your income goes up, tax rate instead of going up may slightly go down. So progressive, regressive. When you read your books, you may also come across proportional taxation. Regressive, progressive, proportional. Proportional means, in this example, A and B, A is also taxed at 10%, B will also be taxed at 10%. So the difference before in tax is the same as difference after tax. That is proportional. So these are three classifications which are going to be used very frequently when we discuss India's tax structure. Apart from these three, there is also another classification which I'll explain to you. Start a fresh para. Start a fresh para. There is also another classification of tax structure in any country. Full stop. This classification is the distinction between surcharge, S-U-R-C-H-A-R-G, surcharge, and cess, C-E-S-S. Now you have to, now we will define what is a surcharge, what is a cess. Please write. A surcharge means tax on tax. Tax on tax, which is imposed on incomes above a certain level in order to make the tax structure more progressive and reduce inequalities further. Full stop. For example, in India, there is a surcharge of 10% on those individuals whose annual income is between 50 lakhs to 1 crore. Please read. Please read what you have written. Sorry? Tax is always per annum. Please read. I am going to ask you what you have understood. Please read. Have you read? Okay. I will explain to you now. Let us say your income is 80 lakhs per annum. Let's say your income is 80 lakhs per annum. You come in the bracket of 30% tax. Higher tax rate, income tax rate in India is 30%. So you will pay 80 lakhs, which will be 20 lakhs. Correct? Of course, it will not be 24 lakhs. As we explained to you India's tax structure, I will tell you, there are so many rebates that you enjoy. Let's say it is 24 lakhs. So 10% further on 24 lakhs you will have to pay. That means 24 plus 2 lakh, 40,000 more. 10% off. This is your total tax burden would be 26.4 lakhs. So charges tax on tax. Tax on tax. After क्या बता दो दिया after नहीं तो है before थोड़ी है. I have given you example. In fact, when I explain to you India's tax structure, I am going to give you a shock. I have only told you 10%. If you are earning between 1 to 2 crores, the surcharge is 15%. If you are earning above 2 crores, the surcharge is 25%. There are 3 surcharges. Wait patiently when I take up India's tax. Yes. About? Example of petroleum. Petrol, yeah. Yeah, correct. What? That tax on, they're specific in ad valorem. Tax on tax, why? No. Import duty, instead of being imposed on value, is imposed on quantity. The reason is, quantity that you are importing is the same, but because of rising prices, value is going up. So I showed you that on 5% on 100 is 5 rupees, 5% on 140 is close to 7.5 rupees. So for some time, government shifted import duty from ad valorem to specific. This is what I said. So is surcharge clear? Let's write cess. Cess is also a tax on tax. Cess is also a tax on tax, which is imposed in order to achieve a specific objective. Please read what you have written again. Cess is also a tax on tax, which is imposed as a temporary levy. Please add that, which is imposed as a temporary levy, LEVY, which is imposed as a temporary levy in order to achieve a specific objective, full stop. Once the objective is achieved, comma, cess may be abolished. Cess may be abolished. Before I explain to you with the help of example, I must tell you that in economics you should never write will be. You should always write may be, because economics is a social science. Social science has ceteris paribus, other things remaining the same. Unlike physical science. In physical science, you throw the ball up, it will surely fall on the ground. In social science, you throw the ball up, Modi may catch it here, or Sita Raman may catch it here. Correct? Always use maybe. Now write, for example, now you are writing examples of cess. For example, Swachh Bharat cess. Yes or no? Krishi Kalyan cess. Infrastructure cess. Health and education cess. Cess and cess. Don't write that. Okay? Now why I have said cess and cess? Listen to me very carefully. And it's very important for you to understand that 2014, when this government took over, cesses comprised 3 to 4% of total tax revenue of the government. Just 3 to 4%. Today they comprise nearly 20% of the total tax revenue. And under the constitution, revenue that central government earns from cesses and surcharges is not to be shared with states. Experts have criticized this huge increase in the revenue from cesses and surcharges. So I am speaking as an economist without any prejudice that unfortunately revenue from cesses and surcharges has gone up dramatically in the last 9 years, due to which states are unhappy that the federal structure is not being conformed to. Because I think all of you sitting here know that 41% of the total tax revenue of the center is to be shared with states. If the center is earning 100 crores from taxes, both direct and indirect, which you will note each, right? 41 crores has to go to states. Correct? Now I ask you a question. If 20% of that 100 crores is coming from cesses and surcharges, the divisible pool comes down. Is it clear? Right. Okay. So this was the last distinction for us to understand what is called general tax structure. I mean, of any country in the world would have direct and indirect taxes, specific and ad valorem taxes, progressive and regressive taxes, and surcharges and cesses. Is that clear? Now, straight away, I am going to discuss with you India's tax structure. So, give the heading India's tax structure. I have a personal request, since you have the whole of tomorrow there is no class. I think the Hazaria is meeting you. Who is that? The Mayur Hazarika, who has qualified as, he was our student here, right? He is, I think, having a discussion with you. So tomorrow I am told that, I also knew only when I reached here, that tomorrow on schedule it was there, our class was there for 3 days, but he is going to interact with you tomorrow. So, because first rank number 5 is the first male candidate who was our student right here. Okay. So we are going to discuss now India's tax structure. So give the heading India tax structure. Please write. India's tax structure comprises taxes imposed both by the center and states. Full stop. This tax structure comprises both direct taxes and indirect taxes. Full stop. Most of the direct taxes are imposed by the center. Except taxes on land and property. Which are imposed by states. Full stop. With regard to indirect taxes, the center imposes two major indirect taxes. That is excise duty and custom duty. Apart from GST, which is imposed both by the center and states. Full stop. As far as states are concerned, they impose value added tax. Full stop. Please read what you have written before I start. Whatever you have written, please read. Yes.
Surcharge and cess are imposed at the same time.
Means?
I mean, both are imposed.
No. It would, for example, when you say, for example, when you are on your income, supposing you are paying surcharge, you will also be, if you see your income tax, this thing, statement, you will also be paying 4% cess, which is called health and education cess, because Swachh Bharat cess is no longer there. It has been merged with health and education cess. Do you understand?
It is imposed on, cess is imposed on income or income plus.
Cess is imposed both on direct and indirect taxes. You understand? Because I have said surcharge is as income goes up, right? I have not said cess. Cess I have said is that it's a temporary levy which is imposed to achieve a specific objective. Once the objective is achieved, cess may be abolished. So have you read? Please read how we divide India's tax structure. We divide it between the center and states. Then what you have written is, most of the direct taxes are imposed by the center except taxes on land and property, which is imposed by states. Then I dictated among indirect taxes, two major indirect taxes imposed by the center are excise duty and custom duty. Each will be explained comprehensively with examples. GST came from 1st July 2017. Right? GST is imposed both by the center and states. But even after GST has come, which has merged several taxes of the states, right? States continue to impose value added tax on specific commodities like alcohol, fuel, electricity. Correct? Right? So let's take a look now first on India's direct tax structure. Yes.
टोल टैक्स डायरेक्ट टैक्स है या फिर सेस है?
Toll tax is not a cess. Cess is always tax on tax for a specific objective. Toll tax is meeting the objective in terms of, because what is toll tax? That an infrastructure or highway has been constructed. Now the cost of that highway is recovered by imposing toll tax. You understand? Over a period of time. Because infrastructure, for example, now whichever highways are being constructed, you will see there are tolls. Because how does government recover that cost over a period of time?
सर क्या होगा ये डायरेक्ट टैक्स?
It is a direct tax. Right. Please write. Now, yes. I don't understand. Value of? No. I said toll tax is imposed to recover the cost of building the infrastructure. Shall I tell you something very, very honestly? I do not understand why on a certain highway for 20 years there is toll tax. I fail to understand that they have not been able to recover the cost in these 20 years. Delhi Jaipur highway, you are paying, yeah, then it is also the cost of maintaining, it is also the cost of additional construction. Because on Delhi Jaipur highway, for example, they are also constructing bridges. So it depends. Because what is the purpose of toll? The purpose of toll is to recover the cost over a period of time.
Sir, if it is done by a private company, then
That it could be public-private partnership, it could be purely government, it could be purely private,
so it
right? It depends. That is the structure. That is the infrastructure structure. That is what you study in terms of infrastructure development, the modes, right? Are you encouraging public-private partnership? Obviously you are. How far it is successful in India? I am sure infrastructure is being dealt with by Professor Vibhas. He is doing infrastructure with you. He will tell you everything about infrastructure and what are overall policies in terms of infrastructure development in India. All right. In this year's multiple choice questions on the 28th, there was, I think, one question on infrastructure also. Am I right? Yes. In fact, the paper itself was very, shall I say, very vague. If you talk of specific questions, there were just 2 or 3 specific questions, giving you choice, which of these constitutes stock market? You know, there was a question. I was not here, I was abroad, but that paper was put on my WhatsApp, which I came on 30th and downloaded that. Then I think there was a question, what constitutes sterilization? Open market operations and so on, right? Of course, that is a part of monetary economics. So now start writing, start a fresh para. India's direct tax structure. India's direct tax structure comprises the following direct taxes which are imposed by the center. Number 1. Shall I make a graph for you? That will be easier. This is direct taxes. 1, income tax. Please write here, income tax. Tax number 1, income tax. Number 2, corporate tax. Number 3, capital gains tax. Capital gains tax. Number 4, STT, securities transaction tax. Make a graph like this. In fact, there is something wrong with the board also. It doesn't, right? Very light. It's not. First is income tax. You can, instead of making graph, number 1, income tax. Number 2, corporate tax. Number 3, capital gains tax. Number 4, securities transaction tax. We call it STT, securities transaction tax. Equalization levy. Equalization levy. Equalization levy. And number 6, digital tax. Digital tax. I'll repeat. The first thing first, we'll explain to you India's income tax structure. Means tax on individual's income. The second tax that we'll explain to you is corporate tax structure in India, that is tax on companies. Listen to me now carefully. When we explain corporate tax, there is a variant of corporate tax which we also explain, which is called MAT, minimum alternate tax. So where you have written corporate tax, please put a dash. Also write also MAT, minimum alternate tax. I'll repeat. First things first, we'll explain what is India's income tax structure. That is taxes on individuals' incomes. Once we have finished that, we'll explain what is India's corporate tax structure. Within corporate tax structure, there is a tax which is called minimum alternate tax, which is nothing but a form of corporate tax. Minimum alternate tax. You will know what it is. Third tax that we'll explain is capital gains tax. Fourth would be securities transaction tax. Fifth would be equalization levy, which is imposed on foreign e-commerce companies. And sixth would be digital tax, again imposed on foreign e-commerce companies like Amazon, Facebook, right, so on. Correct? Shall we start? With income tax structure in India. First thing first, what is income tax structure in India? Income tax structure in India. Income tax structure in India is of two types. As follows. One, old structure. Old structure. And two, new structure. Introduced from the year 2019-20, financial year 19-20, from the year 2019-20. Okay? Now, first give the heading old structure. When you write old structure, please make 3 columns. In fact, even 2 columns will do. In first column, you write heading should be slabs, income slabs. It should be like this. Income slabs, tax rate. Have I made myself clear? Income slabs and tax rate. Income slabs, that is the first column. Tax rate would be the second column. Huh? No. I only said, when I said third, the idea was, supposing the idea was that if you put here serial number like this, that was the idea. That was the idea. You understand? Okay. Old structure. Right? Income slabs, 2.5 lakhs to 5 lakhs. In the column income slabs, you give rupees also, obviously. If your annual income is between 2.5 to 5 lakhs, the next column is what is the tax rate? 5%. Have I made myself clear? If your annual income is always annual. If your annual income is between 2.5 to 5 lakhs, you will be subjected to a tax rate of 5%. If your annual income is 5 to 10 lakhs, tax rate would be 20%. Above 10 lakhs, that is the third one, above 10 lakhs, it will be 30%. Any doubts? I repeat, 2.5 to 5%, 5 to 10 lakhs annual income, 20%. Above 10 lakhs, 30%. Correct? This is the old structure. Let's take a look at the new. Again, same columns. Same columns. Up to 3 lakhs, nil. Up to 3 lakhs, nil. 3 to 6 lakhs. If your annual income is between rupees 3 lakhs to 6 lakhs, 5%. 6 to 9. 10%. 9 to 12. 9 to 12, 15%. 12 to 15, 20%. Above 15, 30%. Have you seen one major difference? In the old slab, 30% is above 10 lakhs. In the new slab, 30% is above 15 lakhs. Correct? But then, I am going to now tell you the major fundamental difference between these two slabs. Start writing from fresh para. The fundamental difference between these two structures is that those individuals who opt to pay tax under the old structure can avail permissible rebates and concessions. Permissible rebates and concessions as provided in the Income Tax Act. Like rebate on house rent, comma, contribution to insurance premium, contribution to provident fund, comma, pension fund, etc. So that by availing these rebates, they can bring down their taxable income. Bring down their taxable income. Full stop. However, individuals who opt to pay tax under the new structure, who opt to pay tax under the new structure are not allowed to avail these permissible rebates and concessions. These permissible rebates and concessions. Full stop. The objective of introducing the new structure is to make the tax structure more simpler. Okay? Please read what you have written. I would request, read. You may have questions to ask me. After you have read, please tell me you have read. If you have a question, do ask me. I have given you some examples of rebates. I have given you practical examples. I ask you a question. You are paying house rent. House rent is an expenditure. Say yes or no. That means you are showing that as an expenditure. That expenditure will be counted as out of that your taxable income comes down by a certain percentage. It's not that you show house rent receipt of 2 lakhs and the entire 2 lakhs is reduced. There is a percentage. Then you are contributing to provident fund. You will get some rebate. You may be contributing by way of insurance premium. You may get some rebate. These are permissible rebates listed in the Income Tax Act 1961. Remember, please, rebates are there in every country's tax structure. So, be it individuals or companies, they enjoy rebates. But the kind of rebates enjoyed by companies are different from the kind of rebates enjoyed by individuals. I give you an example, because corporate tax also would have rebates. Let's say a company invest for green energy, it will get some rebate. Let's say a company invests for environmental protection, it will get some rebate. Let's say a company invests for solar this thing, it will get some rebate. Let's say a company invests in a backward area to develop that area, it may get some. So the list of rebates is notified in the Act. And I have the last sentence that dictated was that I ask you a question of common sense now, pure common sense. You have X income. The income earned by you is X amount. Now from this X amount, the tax authorities have to provide for rebates. Yes or no? Does it complicate the tax structure? Whereas if there are no rebates, very simple. So when 1920 this was introduced, these were not 3 to 6. It was introduced as 2.5 to 5, 5 to 7.5, 7.5 to 10, 10 to 12.5, 12.5 to 15, above 15. Since election year is coming, you know, hats off to this government, hits the jackpot right at the right time. So what they have done is, from 6 slabs, they have been converted into 5. Forget about nil tax. Earlier there was 6, 2.5 to 5, 5 to 7.5, right? And the surcharge has been brought down. So the idea was, when 1920 it was introduced, the idea was, the budget says, this budget 23-24 says that the new structure shall be taken by default. What does it mean? I am working in an organization. Unless I specify to my administration that please tax me according to the old structure, I will automatically come under new structure. Do you understand what I have said? Now, I am not going into the argument whether old structure is good or new structure is good. But I am sure that when I ask my CA, he says you should use the old structure. Because it will depend on what is your income. At high income, new structure is not conducive. So, I also want to tell you that every country in the world has rebates and concessions, both for direct taxes as well as indirect taxes. I ask a question of common sense, pure common sense. You are an exporter, and for exporting certain goods from India, you have to import certain raw material. Correct? If government imposes high duty, import duty on that raw material, your exports become costly. So you may get some rebate. You understand? 5 years back, there was a full-fledged question in mains. The question was, what do you understand by tax revenue foregone? That question was picked up from economic survey, right? I ask you a question, that you are covered, you come under 30% tax bracket, all right? Let's say, and this is the statutory rate on your income, means statute in the act. By enjoying rebates and concessions, the effective rate may come down to 23.4%. This is calculated by the government, which means due to rebates and concessions, government foregoes and loses revenue. This is what we call revenue foregone as a result of rebates and concessions. Correct? Then, if you go by economic survey figures, those figures suggest that on an annual basis, roughly 2,60,000 crores, government may lose on custom duties revenues, 2,25,000 crores it may lose on excise duty, about 60,000 crores it may lose on corporate tax, and about 25,000 it may lose on income tax due to rebates and concessions. And yet, every country has to give these rebates and concessions. I have given you an example of exports. So similarly, even manufacturing certain items, they would enjoy rebates and concessions. So don't think there's anything wrong with rebates and concessions. The only thing is, sometimes, they may be misused and inflated. I give you my own example. My CA asked me, sir, how much do I write as expenditure incurred by you on books, journals, periodicals during the year? Because that expenditure is directly related to my work. So that expenditure qualifies me for some rebate. Do you understand? Then he asked me, sir, how much do I write for petrol and drivers expenditure that you are incurring? If I tell him that I am paying 1 lakh salary to my driver, does it sound sensible? No. So the CA knows best that within the ceiling, how much can be availed as rebates and concessions. Don't think there's anything wrong. Every country would have rebates and concessions on both direct and indirect taxes. So the new structure aims at, because if somebody asks you what should be the fundamental characteristic of a good tax structure in any country in the world, your single answer should be, it should be as simple as possible. Simple for you to calculate your tax liability, simple for the tax authorities to calculate your tax liability. Otherwise, it will lead to litigation. Yes or no? So, that was the idea of having the new tax structure, so that gradually people may move from old to new structure. Is that clear? Right? You have also to write now surcharges. Please write. There are also surcharges. There are also surcharges.
Sir, in future the old regime will be ended.
Depends. Actually, see 1920, now 23, 24. Isn't it? I'll tell you what actually is happening. Government is looking at what percentage of income taxpayers have migrated to the new one. That is one criteria. The second criteria is that percentage may be of those whose income is very low. Understand? So this whole thing has to be worked out over a period of time. So what have you written? There are also surcharges imposed at the rate of. There are also surcharges imposed at the rate of 10%, comma 15% and 25% respectively on annual incomes between 50 lakhs to 1 crore, comma 1 to 2 crores and above rupees 2 crores. Read. Read. What have I dictated? If your income is between 50 lakhs to 1 crore, 10% surcharge. If it is 1 to 2 crores, 15%. If it is above 2 crores, no. Will you believe? In the 23-24 budget, before 23-24 budget, there were 4 surcharges. 10%, 50 lakhs to 1 crore, 15%, 1 to 2 crores, 25%, 2 to 5 crores, 37% above 5 crores. Since election year is coming, that 37% is gone, about 25. Any doubts? You can ask me. Yes. What are you doing now? Income tax or corporate tax? So when corporate tax comes, that also is a surcharge, but different. We are discussing income tax structure on individuals. Corporate tax structure comes after we have discussed income tax. Yes. मैं एक बात पूछूं आपसे, हिंदी में बोलो इंग्लिश में? Sometimes, sometimes you are asked a question, no, not the exam, as in that why should there be a surcharge? Why not straight away raise the tax rate? Yes or no? I ask you a question of common sense. If you raise tax structure and rates, you are conveying very wrong signals, not only to companies in India, but also to foreign companies. Tax structure should be as stable as possible. You don't fiddle and tamper with the tax structure. So, you could well have asked me, sir, Why impose surcharge? सीधा 30% से 50% कर दो. Surcharge is meant to be flexible, right? When I told you election year is coming, what the government has done is that on individuals above 2 crores, straight 25%. Earlier, 2 to 5 crores it was 25%, above 5 crores it was 37%. And I dictated it very clearly. Surcharge is imposed on incomes above a certain level. Any other question? Yes. No, rebates, I have given you a very good example that you are an importer or you are an exporter or you are a manufacturer. Because don't forget, as a manufacturer, you may also be manufacturing for export. So it's quite possible on your manufacturing product, government is imposing excise duty, right? Because of excise duty, your manufacturing product becomes costlier. So you may get some rebate. Rebates exist based on certain rationale. You can't be giving rebates on every manufactured product. Small scale industries, excise duty is very low. So try and understand. There are two things about to be understood about rebates and concessions. A, undoubtedly rebates and concessions may be abused and misused and inflated, right? So that you try to ensure that as far as possible they are rationalized and minimized. Correct? You cannot do away with rebates, right? Particularly on corporate taxation. B, I ask you a question. Tomorrow government does away with rebates. Your savings come down. Today you are saving in provident fund because you are getting rebate. Do you understand? There has been criticism of the new structure. That is it encouraging consumption? You understand? And it is yeah. New structure, yes. Oh no, don't say vicious cycle. Say cycle of growth. No, no. Vicious is vicious. There is no such thing called vicious. I mean, the idea was, this is one side, one way to look at new tax structure. The other way is whether it promotes consumption and reduces savings. If it reduces savings, it is also reducing investment. So there are counter arguments. That is the reason I said, when somebody asked me the question, sir, is the idea altogether to do away with the old structure? I said, government is closely watching what percentage of taxpayers are migrating to the new structure. That is one criteria. The other is this percentage may be having very low incomes. Right? So that is another criteria. Gradually, based on these statistics and figures that government has, it may decide to do away with the old structure. But let me tell you, undoubtedly, if the old structure is abolished, it is going to reduce savings. Because I have given you examples. You may be saving by way of insurance premium, provident fund, and so on. So that is income tax structure in India. Let's take a look at the corporate tax structure now. And again, let me tell you, corporate tax structure also is, there are two structures. The new structure was introduced in September 2019, which means 1920, right? Okay, please write. Corporate tax structure in India is also of two types. As follows: old structure, and new structure, introduced in 2019-20. Full stop. The old structure has two tax rates. As follows. Number one, 25% tax rate. 25% tax rate on incomes of such of the companies whose annual turnover is up to rupees 400 crores. Up to rupees 400 crores. So that is one. Two, 30% tax rate. On companies having annual turnover above rupees 400 crores. Please read what you have written, because I have a doubt you may have a question. Any question? Sorry? Turnover means sales. Sales. If your annual turnover, annual sales are up to 400 crores, tax is not on sales. Tax is on income of such of the companies whose annual turnover is up to 400 crores. Tax is always on income. But the criteria is such of the companies whose annual turnover is up to 400 crores. 25% tax. Companies having annual turnover above 400 crores, they are subjected to a tax rate of 30% on their annual income. Tax on income. I knew that question be asked. Is it clear? Yes. My goodness. How turnover is calculated? Every company has to submit its balance sheet. What are you saying? कहाँ बैठे हो भाई? So, that is the old structure, existing for a long time. Now, let's take a look what is the new structure. The new structure also has two rates as follows. The new structure also has two rates, tax rates as follows. I'll repeat. The new tax structure, I've already said when it was introduced. It was introduced in September 2019, which means the financial year was 1920. Correct? The new tax structure also has two tax rates as follows. One, 15% tax rate. 15% tax rate on new manufacturing companies set up on or after 1st October 2019 which start their production by 31st March 2024. Read what you have written. %15 tax rate on new manufacturing companies, because new manufacturing company will not have income. Set up when? On or after 1st October. I said it was introduced in September. We were all shocked. How in the middle of the budget, Sitaraman has come out with this new tax structure, right? So, new manufacturing set up on or after 1st October and which commenced their production before 31st March 24. This 24 was earlier 23. Last year it was extended to 24. And the second rate, please write, 22%. 22% tax rate on all other existing companies. All other existing companies. Okay? Again, start a fresh para. The fundamental difference between these two structures is that companies which opt for the old structure are allowed to avail permissible concessions, are allowed to avail permissible rebates and concessions provided in the Act. E.g., for example, setting up some green energy plant, comma, investment for environmental protection, comma, investment in a backward area, and such other rebates listed in the Act. Such other rebates listed in the Act. Full stop. These rebates are not permissible. These rebates are not permissible for companies which opt to pay tax under the new structure. Simple as that. Now, you may ask me a very simple question. Sir, why 22%? Why not 24%? I mean, right? No, the government worked out. I told you, I give you example, that tax rate on companies is 30%, highest. But which is the statutory rate? By availing rebates and concessions, government has been working out, effective rate comes to 23.4. So the government has that calculation. If we have it, government also has it. So it kept it 22%. Yes.
Suppose the new company plan to there are any backward areas, manufacture
Whatever. The manufacturing company, whether it is for it, but it will be subjected to a tax of 15%.
the company get tax holidays as the old structure or
Tax holiday is a totally different thing. Tax holiday is given to certain specific companies. Tax holiday may be for 5 years, 10 years, that's right. Yes.
Sir, why low tax rate for these specific companies which were set up between 1st October 2019 and
That is because you have set up this company. By the time you start earning income, this is for those companies which were set up on or after 1st October, but we commence their production before 31st March 24. Correct? Once they commence their production, obviously over a period of time they will become big companies, so they may be subjected to 22%.
So if a company opts for the new structure, so
It will not enjoy rebates and concessions.
but sir, on that case, what would be the environmental sustainable project?
No, not at all. Whatever rebates and concessions are listed in the Income Tax Act 1961, be it as it applies both to individuals and companies, right? They are not permissible for those opting for the new tax structure, be it individuals, be it companies. Simple as that. That is why I have dictated the fundamental difference between these two structures is that under the old structure, these rebates are permissible, under the new structure, they are not permissible. Simple as that. Then you have surcharges. Please write. There are also surcharges. There are also surcharges at the rate of 7% and 12% respectively for companies having annual income between 1 to 10 crores and above 10 crores. Is it clear? Right. Full stop. Start a fresh para. Corporate tax rate. Corporate tax rate on foreign companies operating in India is 40%. Is it clear? Foreign companies are subjected to a tax rate of 40%. So this is income tax structure, corporate tax structure. Day after when we meet, I'll tell you what is minimum alternate tax. It's a very interesting tax because this tax was introduced by none other than Chidambaram in 1997 because he was able to plug a very important loophole which was exploited by none other than Dhirubhai Ambani. All right. So it was Chidambaram who was able to plug. Tomorrow's session by tomorrow's session by Dr. Mayur Hazarika. Time 6 p.m. Economy class. Economy class? वो तो off है ही. All right. So I'll see you day after finishing tax structure. All right. Okay.